Risk appetite remains strong despite the latest rise in oil prices. Hello traders, Fawad Razak here, market analyst with FOREX.com. Today is the 11th of May and we've seen the price of oil gap higher at the Asian Open after Trump said the counter proposal from Iran was totally unacceptable. Despite that, we've seen US index futures rise to new record highs, and silver has broken the $85 mark following a 6% rally. So let's get into it. Starting off with the S&P 500, you can see it has bounced back after making a weaker start. The trend has been quite strong in recent trade, and that momentum continues at the start of this week. From here, it could be heading towards the 7,500 level, which is the next psychologically important level. Below that, we have the 161.8% extension of the last significant downswing from the end of January to the end of March. So those are the key levels to watch. On the upside, we could see some profit taking around those levels, but essentially the trend is bullish, and for as long as the series of higher highs and higher lows remain intact, the path of least resistance will be to the upside. Catching my attention today is the chart of silver breaking above the $85 level mark with a 6.5% rally. It has broken above this area of resistance today of around 81, which was previously resistance. As you can see, it has taken that level out and surged to 85, where it's now testing the point of origin of the previous breakdown around this zone. So we could see some profit taking around here, but essentially the breakout is quite significant, and if it can hold the breakout into the close, I think this would keep the bullish bias intact. It has also recently created lots of bullish price action, for example, breaking through this trend line that had been in place. And it has created a couple of higher lows relative to this low, which in itself was a false breakout scenario when silver tried to break below this low that was created from early February. But as you can see, it created a swing failure pattern here, with silver breaking that level on that particular day on the 23rd of March, but closing the session back in the green. So that was a key reversal day for silver, and since then we've seen the price of silver come up quite a bit from that area before easing lower, consolidating here, and now breaking higher again. So price action is certainly bullish. From here, silver could easily go back towards 90 or higher over time, but we'll take it from one level to the next and reassess the situation as new price action unfolds. So support now comes in at 81, which was previously resistance. This level needs to hold for the bullish breakout to remain valid. But in the event silver were to go back below the $81 level, then things will start to look a little bit more bearish once more. But we'll cross that bridge if and when we get there. For the time being, this is clearly a bullish chart. Now then, Bitcoin has been printing higher highs and higher lows for a while now. It has been largely ignoring the oil price spike, despite volatility we saw, for example, in the middle of March, with equity markets in Europe and the euro dollar finding trouble. The popular cryptocurrency has been trying to establish a low around a major long-term support area of around $65,000, I should say, which was previously a major resistance zone. And as you can see, in the last couple of months, we've seen some bullish price action on the monthly time frame, which is what you would want to see if you're bullish on crypto. And so far, so good. So let's zoom in a little bit, and looking at the weekly chart, the weekly candles have been green in the last 5 or 6 weeks. It's slowly grinding higher. So from here, it could easily go to 85 or even 90 before staging a bit of a correction again. But for as long as this level now holds, this blue line here at around 74,000 on this weekly time frame, the path of least resistance will remain to the upside. Going back to the daily time frame, and you can see price action here too has been quite constructive. Recently, though, it has found some resistance from around the 200-day moving average, coming in at around the 82,000 area, 82,500 or thereabouts. We tested that level last week on Wednesday. Price formed some resistance here, and now it tried to have another go at that level again, it's found some resistance. But as I said, the trend has been bullish, and so we could see this dip that we are seeing today being defended once more, especially as price is now testing a key level of support, which was previously a major low here. We broke below it, so that area should have turned into resistance upon the retest. And although we did get a bit of price action here, as you can see by the works of these candles, the more recent price action shows that we've broken through that area. So we are now retesting that zone from above, and for that reason I'm expecting Bitcoin to hold this area. To be specific, it's the area between 80,000 to 80,525. The low of today so far has been precisely within the upper end of that range. So let's see if that low will hold and whether we can push on from here. If Bitcoin does hold here, then the next objective would be liquidity above the most recent high of 82,800, and then thereafter 85,000 I think is the next stop, because that's the next key psychologically important level, and that level also corresponds with these lows here, which could offer some resistance. But beyond that, this level is an interesting one at 88,700, given that it marks the low of this candle that was taken out during that big sell-off that we saw earlier this year. That level was never retested on the daily time frame, and so it will serve as an important level to watch. Should we get there, we could see some profit taking around that zone. So Bitcoin can easily bounce back from here. Keep an eye on it. If it doesn't and we go below this area decisively, then at that point things will start to look a little bit more bearish once more. For more market updates and insights, head over to the news and analysis section of our website, FOREX.com. I'll see you in the next one. Take care.